Welcome everyone to Vested Interests. This is Shane. Before we get into the video, I'd like to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who have subscribed to the channel. I really do appreciate it. You are the reason the channel continues to grow, up to over 120 subscribers now. Really awesome. Thank you guys so much. For those of you who may be stopping by for the first time on this channel, we focus on a passive income investing strategy by buying stocks in good companies that pay dividends. It's not rocket science, and in my opinion, the best way to do anything is to keep it as simple as possible. So it really boils down to consistently investing, dollar cost averaging into dividend growth stocks and growing companies with positive cash flow. Cash flow that covers the dividends and companies that return a high yield on their invested capital. I utilize both a dollar cost average approach, so DCAing every week, every couple weeks when I get paid at a minimum, every 2 weeks, but I also do large purchases as well if I have extra funds. I cover all my investments into this portfolio on a weekly basis. That's what this particular video is about, the weekly portfolio update. My channel is free. I don't have a Patreon. I don't have anything to sell you, or you don't have to go into some special place to see what I'm investing in. It's all out in the open. But if you'd like to help the channel, dropping a comment, liking the video, subscribing to the channel helps out tremendously. Appreciate everyone who's done so. I do have some links down in the description below for Webull. If you guys don't have a brokerage account, want to sign up for Webull, if you use that link, you'll get some free stocks. I will get some free stocks. That's a way you could help out the channel as well. There are also some links to some books that I have covered on this channel. If you guys want to buy those through Amazon, if you use those links, I will get a kickback from Amazon as well. That's a way that you can help the channel if you're interested in helping the channel or reading those books. You don't have to use those links. You can go ahead and sign up for Webull on your own without them, or buy those books on your own without those links. I recommend them. I do think there's value there, and Webull is a service that I use not for this entire portfolio, but for some of my more speculative plays. BABA is one I'm buying over there that I don't really cover on this particular channel, but it is another brokerage account that I use. Ally Invest is the brokerage that I use. It's an online bank. If you're not familiar with Ally Bank, check it out. Like I said, I don't cover all my Webull activity on this channel. It's more speculative in nature with much higher risk into stocks that don't pay dividends. In today's video, we'll be covering the most recent portfolio activity. So without any further delays, let's get right into it. We did add $1,198 to the portfolio. So let's take a look at how we spent those funds. So as you can see here, May 16th, 2022, we did add $799.13. And before we jump in, guys, I do know that the market is pretty volatile. So on red days, it's good to jump in and look at those companies that you really have done your research on and have high conviction that they're great companies. You know that they have free cash flow, and continue to add to those. Don't freak out in the market. Like I always say, whenever you walk into a store and stuff's on sale, do you walk out and say, I don't want to go in there because things are on sale? No, you take advantage of the sales and you buy the things that you want to buy on sale. So it's no different in the stock market. Whenever you see something you want to invest in and it's on sale, so long as you've done your research and you know that it's a good company, it has positive cash flow, it's a growing company, you know, they're not going out of business or anything like that, or have a bunch of debt that they can't cover, then just add them, buy them. Don't be afraid to buy just because the market's going down. That's the time that you invest for generational wealth. You decrease your cost average per share, you increase your yield, and you increase your future returns. So with these particular funds, the $799.13 on May 16th, we added 4 more shares of Intel Corporation, ticker INT. It is a in the technology sector, and we picked it up at $43.22. So again, anything under 50 for Intel to me is a buy, and at $43.22 it's a steal. NextEra Energy is a utility company. We picked up 4 shares, ticker NEE, at $70.38 there. We added 2 more shares to Prudential Financial. Financials is one that I'm seeing a lot of value in. Prudential, Bank of America, Ally Bank. I just picked up for my 2 daughters' custodial accounts. Actually, Warren Buffett picked up some Ally as well. And again, that's a bank I use. So I added some shares, not in my account, but in my daughters' 2 custodial accounts, which I also don't cover on this because it's custodial accounts, and I just want to cover what I'm investing in for myself. Theirs is a little different. I have some Apple in theirs because they have a longer time horizon. Apple doesn't really pay out a great dividend, but I'll be honest with you, if Apple continues to drop, it's down in the 130s now, and if it continues to drop down into the 120s, I may look at adding Apple to my portfolio because that's pretty cheap for Apple. Bank of America, again in the financial sector, ticker BAC, we added 4 more shares there, $34.90. And Kinross Gold out of the material sector is a mining company, ticker KGC. We added 1 share. We had a little bit of extra funds left over, $4.30. As inflation continues to rise, I think gold will probably continue to increase in price. And so some of the mining companies are playing that. And then some of them are also playing the EV future. Mining companies that produce nickel, cobalt, some other things that the EVs, that the electric vehicles we're going to have in the future utilize, those will be good plays for the supplier of those materials. Look into some Siboney-Stillwater. I think I picked up some shares on that as well. So let's keep looking. On the 17th, we went back to work, still red day, $399.67. We put to work, we bought 1 share of US Bancorp. Again, in the financial sector, ticker USB, $49.28. We added 1 more share of Leggett & Platt, discretionary. Consumer discretionary is another sector that's down right now. Might be an area to look at to add some. We added LEG is in the consumer discretionary at $37.36. We added 1 more share of Bank of America financial, ticker BAC, $35.78. We added 4 shares of Store Capital, ticker STOR, and this is in REITs and real estate sector. We added 4 more shares of Huntington Bank shares, ticker HBAN, again in the financial sector, $13.34 per share. I think it's actually pulled back a little bit more than that, maybe down to $12 per share, somewhere in there. And here's another mining company I was just mentioning, Siboney-Stillwater, ticker SBSW. We added 8 more shares there at $12.19. Siboney-Stillwater is a mining company out of Africa. They actually have a strike going on, so part of the volatility in their price is the strike that's currently going on. But once that's resolved, I believe this is a good one that should bounce back. And then here it is again, Kinross Gold Corp, 4 more shares there, ticker KGC, another mining company. They are a gold mining company as well. And as I mentioned, if inflation continues to go and we hit recession, typically gold, silver, the precious metals, materials in general tend to do well in those times and go up in price. So that's a play on if inflation continues and if we end up in a recession that may last throughout the rest of this year and into next. A quick overall view of the portfolio. We are down a little bit. Again, really red in the market, a lot of volatility. So the overall value of the portfolio is $111,705.64. The dividend yield is up to 4.498%, almost 4.5%. And this is the most important part, guys and gals. The annual dividend income continues to go up, whether the market's up, down, or sideways, as I continue to invest into the portfolio, as the dividends are paid out and they invest back into the companies that invested or paid out the dividends, called DRIP. I do have that on, dividend reinvestment program, but I'm thinking about turning it off because to be honest with you, some of the stocks that I have shot way up in value, and I don't want the dividends necessarily going back to them while they're so overpriced, in my opinion. Chevron is one, it's up 60%. Kroger is up 40%. Spartan Nash is another one that's up 40%. I'm going to be doing another video where I may look at some of these and trim some of my positions where I have a significant amount of value and invest into some undervalued stocks like Apple. Apple is one that I'm looking at heavily. Again, if it hits the 120s or lower, I think that's a steal for Apple. It has a lot of future growth potential, so it's one I'm watching to potentially trim some of my positions that I've made significant gains in and reinvest those into some undervalued dividend stocks. But I will cover that. I'm going to look at that in another video to give you kind of my plan and what I would trim if I was going to do that. And again, whether the market's up, down, or sideways, this continues to grow. We are over that $5,000 mark, $5,000.24 and 28 cents annual dividend payout from the portfolio overall. Now let's take a look at the sector breakdowns. In communications, we're at 9.77, consumer discretionary 3.8, consumer staples we're sitting at 8.84%, energy we're sitting at 10.46, financials is at 10.86, healthcare we're sitting at 11.29, industrials 11.39, technology is creeping up there a little bit, 11.51, materials again shot up there a little bit to 6.38. Utilities is at 4.67. It's down a little bit as far as the overall allocation of the portfolio, but I haven't been adding to utilities except for Next Era Energy this last go round. And if Next Era Energy continues to be undervalued, I'll probably continue to add. And REITs and real estate is at 11.03%. I still do not have any ETFs in the portfolio, but there are some that I'm watching, some foreign emerging markets and foreign markets that I may jump into, especially out of the China market. With them shut down, their stocks have taken a big hit, and it may be one that with a rebound you could make some money there. But I don't know that the bottom's in yet, and I be honest with you, so many other positions within the portfolio are good value right now. It's hard for me not to continue to add to those. So that's really it for this video. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit the thumbs up, ring the notification bell, subscribe to the channel, drop a comment down below. Let me know what you think about the video. Let me know what you think about the additions. What did you add to your portfolio this week? What are you watching? Where do you see value? I do personally read and respond to all the comments. I'm always interested to read your questions and or opinions or suggestions for future videos. Or hey, if you don't like the videos, drop a comment down below and let me know what you think is bad, what you don't like about them, what I could change, how I could make it better. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, we'll see you next time, guys. And remember, we know the market's volatile, but continue to go down the path, dollar cost average, on the way to financial freedom. Don't worry about the pullbacks. Find those companies that are great companies that are continuing to grow, have great free cash flow, low debt, high revenue, and high future growth, and continue to cost average into those, dollar cost average into those on a weekly, bi-weekly, or monthly basis, whatever you can afford, whenever you can afford it. It's the only way to financial freedom. Guys, that passive income return is what you're looking for. Someday you'll be able to retire and you'll be better than 99.9% of the rest of the Americans out there who are doing nothing. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I am only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money and should never invest any amount you're not comfortable losing. Always do your own research and invest based on your situation, circumstances, and select the criteria, or seek the advice and counsel of a certified financial advisor.